it does seem like risk assets will be well supported. Well, it will not be $1.9 trillion, but it will be pretty big still. And we have Fed saying that rates will stay low for longer.
Sure. So I think the overall backdrop remain positive, as you touched on. Now, this is the year in 2021. It's going to be about reopening of the economies, recovery, the vaccination. It's going to take time. And don't get me wrong, I don't think we're completely out of the woods. We're still seeing shutdowns in a number of parts of the world. But when you look through some of this and you think about the recovery alongside the policy push, both the fiscal and monetary, I think the risk assets actually are going to be very well supported.
How about haven assets? I mean, we talked about how the World Bank has cut its growth outlook for the year. We have the IMF set to do that. Is that enough reason to turn bullish on haven assets like treasuries?
It's a little tough. When you think about the U.S. treasuries, I would say that the path of least resistance is still slightly higher rates in the U.S. on the back of the recovery and the more fiscal stimulus that's coming on the way. So overall, the fact is that when you think about the nominal rates and the real rates in U.S., they're still not very attractive. So I don't think it's a point where you can get very bulled up about the treasuries. But yes, you will obviously hold maybe some long end of the treasuries from a hedging perspective in your portfolio. But given the lower efficacy of that hedge, again, it's not the same role that the treasuries played in a lot of portfolios a number of years back.
Neeraj, how does that steepening yield curve in the US, modest and gradual as it is, inform your views of the Asian credit space?
So I think that's a very important backdrop. And in fact, if you take a step back and think about what defines a lot of risk assets, it's the rates markets and US and the broader developed market scenario and the US dollar. And I think when you look at the path for both, a gradual uptick in US rates and steepening of the curve and a dollar which is stable to somewhat on a weakening path, it provides you a very positive backdrop for the risk assets in this part of the world in Asia, where the credit markets in Asia still yield fairly attractive levels. The risk premiums are still giving you enough to actually look for in terms of generating some income and return.
And what does that tell you about how far you want to go along the risk spectrum then in this part of the world? Do you want to be sticking to investment grade, or are you comfortable pushing into high yield?
We are comfortable going into high yield here. And in fact, if anything, we like high yield more than investment grade at these levels. I do believe that the spread cushion in investment grade is a lot less, specifically towards the top end of the curve. It doesn't really, in overall yield terms, it's not attractive. It doesn't really pay you for the risk going down and going in credit. So I would rather hold more high yield than investment grade at this point.
And that means China, Neeraj.
Well, China is the biggest part of the markets in Asia. China is going to be one of the biggest parts of the global fixed income markets. China is clearly one market which you cannot avoid. When you have to be clear, it's attractive in the dollar market, it's attractive in onshore market. China is a big part of the story when you think about Asia.
So which other high yielders are you liking? Indonesia? India?
So in the local, yes. So in the local markets, we do like Indonesia, we like India, we like China onshore market, as I said, from both rates and credit perspective. And some of these markets, when you look at the combination of real rates and the potential for the FX stability at this level of carry, I think they look quite attractive in a world where there's real scarcity of income.
Neeraj, I want to bring you back to some of the comments you're making at the top of the interview. You broadly see a more positive outlook and backdrop for risk assets, particularly towards the end of this year. I just have a question, and it's the question of the day, and we're putting this to our interviewees today. Are investors overly complacent about the pace and the rollout of the vaccine? Which assets are most vulnerable, do you think?
So I think I wouldn't say complacent, but certainly expectations are fairly high. And I think as I said, there's still a long road ahead of us in terms of the vaccination, herd immunity, and the reopening of the economies. So some of the sectors which have rallied up a lot on the back of the expectation of reopening and vaccinations, I think we have to be mindful that it's going to take time. And you're seeing some of that in terms of the numbers, how much of that vaccines have been administered in most parts of the world. It's lower than the original plan every country had coming into the year. So you're right that it's a slow path, but I do think we will continue to see the vaccination program going deeper into in the countries wherever it has started.
Neeraj, what are you making of the trajectory of the US dollar? We've seen dollar strength in recent weeks. Can that be sustained, or is broad weakness likely to persist?
I think after some consolidation, you would see the dollar weakness coming back on cards. So if you, in fact, step back and look at the last 12 months, the dollar has been making the low highs, which is every time you see a consolidation, and it's natural given the positioning in the market. Most investors are short dollar or were short dollar coming into the year. But every time it's making lower highs. So you see consolidation in the market, you see some strength in the dollar, and then it drifts lower. Now, depending on the policy push and how it actually evolves from here, I think one would expect still a modest decline in US dollar. I don't think it's a risk of a major shift in the value of dollar or dollar falling off the cliff, which I've seen some people calling for. I don't think that'll happen. But the path potentially for rest of the year will be a modest decline in the value.